Greetings, everyone. This is Richard Crevo with our chart drill down for April 14th, 2016. If you have any questions about any of the indicators I use on my charts or why they're set up the way they are, refer to the YouTube video dated May 11th and entitled Chart Tutorial for an explanation. If you still have questions, feel free to email me at rcrevofx@gmail.com. Now, remember, these charting drill downs are instructional. They're designed to show you how I identify higher probability trading pairs. And any of the setups that I show you this evening or in any of the other videos by no means guarantees that any of those trades are going to ultimately turn into winning trades. Remember that trading is all about probabilities. Identifying a trading edge, that's what we're doing here, an edge, something that we can exploit to provide us with a higher probability trading opportunity. And the more of those edges that we identify, the greater the likelihood we're going to be profitable at the end of a week, a month, a quarter, a year, that type of thing. So with that, let's go over the disclaimers quickly, and then we'll take a look at the charts. And just highlighting here, significant levels of risk in currency trading. I'm sure you're all aware of that, and if you're not, you certainly should be. Traders should only trade with risk capital, money that you can afford to lose. Large degree of leverage that can work both ways, and the content provided in here is for informational, educational purposes, not intended as specific trading recommendations. Now with that, let's take a quick look at the charts. Now, if you've watched my videos before, you may recall that I use a strong weak currency analysis to point me in the direction of the pairs that are in the stronger trends. If you want to know more about that strong weak analysis, how I do it, how it helps me, email me again, rcrevofx@gmail.com. Now, the most recent strong weak analysis I did, which was about maybe 45 minutes ago, indicated that the Canadian dollar was the strongest currency and the pound dollar was the weakest currency. So given that information, the first chart I'm going to go to is the one that we have already up, which is the pound Canadian. So here's the kind of thing I'm looking for. With the Donchian channels on my weekly chart, I've got weekly, daily, 4-hour, and 1-hour. What I look for is what is price action doing, obviously, on the chart. And here it has touched the upper channel. This was back a while ago, back in December, but it has taken out the lower channel. It has continued to press that channel lower and lower. So the pair has been making lower highs, lower lows. So based on this weekly chart, we can see we're in a downtrend. So based on that, I'm looking for opportunities to sell the pair. When I go over here to the daily chart, seeing the same thing. Price action took out the upper channel, touched it, and then back on January 21st this year, continued to take out that lower channel, lower highs, lower lows. So my two longer term charts, my kind of go-to charts, if you will, for direction, which way a pair is trending, they're telling me this pair is moving down. So I'm only looking for opportunities to sell the pair. I'm a trend trader looking at longer term charts. And the charts that I would enter a trade off of are going to be the 4-hour or the 1-hour chart. Now, what I want to see is price action retrace, ideally to touch that upper channel and then go back down and take out the lower channel. Because when that happens, oftentimes, not all the time, but sometimes good things can happen. For example, like we said, the pair has been in a downtrend for a while. My ideal setup is when price action in a downtrend touches the upper channel and then takes out the lower channel. So if I would have gotten in this trade right at that point where the lower channel got taken out, the most I would be up in this position is 423 pips at one point, and right now I'd be up about 364 pips. The idea here with the Donchian channel strategy is look for the strongest trending pairs, get in when they present an opportunity. Just don't enter, a short position on this pair randomly. You want to wait for a setup. And then after you get in the trade, you trail your stop down above the upper channel. And we can see if we would have done that on this particular pair, we'd still be in this trade because it's never touched the upper channel since we entered at this point. So this is what I'd be looking for an ideal opportunity. Now, again, this has retraced a bit. It hasn't touched that upper channel yet. We're still about maybe 72, 80 pips away, right in that neighborhood. But what a trader could do, a more aggressive trader, is set a price alarm at this lower channel, which is about 1.8112, right in that vicinity. And then when that price alarm goes off, if that price alarm goes off, come back and take a look at the charts again and see if the pound, for example, is still weak across the board, if the Canadian dollar is still strong across the board, and then that would be a likely candidate for an entry. What I always do, though, once I look at the setup, is I go back to, if I like the setup, I go back to the weekly chart and I see, okay, what's going on here? This pair has been going down very nicely, but we see at this point, its lowest point, right where my crosshairs are right there, is roughly 1.8125. Now, at almost that same level where we are right now, price action moved down, hit that point at about 1.8148, give or take, and began a relentless move to the upside over a lot of weeks. Also, as I go across here, I see at roughly the same level that we're trading at now, there's been some oscillation that has been going on, back in that same price area vicinity. So there's no guarantees as to what's going to happen, obviously. The market is the final arbiter in this situation as to what exactly is going to happen. But, I mean, it could blow right through this area and continue down. It certainly could do that. Or we could be in for the same thing, some kind of, chop, what have you, that we saw over here. In this situation, if I'm already in the trade and I see price action is running into some support in a downtrend on a longer term chart, I might consider lightening my load a little bit, closing out some positions to lock in some profit. I might consider moving the stop a little more aggressively. Nobody knows for sure. Nobody can tell you what the future holds, but we are running into a situation where historically this pair has made a move in the opposite direction. Going to do it again? I have no idea, but this is one of the ways I try to look ahead to see what potential price action might be running into at that point. Okay, so we said the pound Canadian dollar was the pound was the weakest, the Canadian dollar was the strongest. Let's go down to the next weakest currency and take a look at a pair that's been on the move as well, and that's the U.S. Canadian dollar. And because we've got the Canadian dollar setting up here as one half of the pair, just like we did in the other one, and it's on the same side of the currency pair, we're going to see some similarities in the way price is behaving here. Again, upper channel took out the lower channel, is continuing to move down, is making lower highs, lower lows, downtrend, lower highs, lower lows, downtrend. Slow stochastics is open, angle and separation. Down here, it's beginning to curl over a little bit, but I mean, we're still open and we're still approaching. The K line is below 20, the D line is not. So we've got some potential for the pair to be able to move lower. So again, I'm looking to short the pair off a lower time frame chart, off a 4 hour or a 1 hour. The setups are going to come more frequently on the 1 hour than they are on the 4 hour. So this came at one point, it still didn't touch that upper channel, but it came within about 25 pips. That's pretty close, not official, but pretty close. So what I'd be looking for here is for price action to approach that lower channel at about 127.43, right around in there, set a price alarm there, and then come back and check and see what the charts are holding in store for this dollar Canadian pair. Is the US dollar still continuing to be weak? Is the Canadian dollar still continuing to be strong? Because the longer that occurs, the longer that strong weak relationship occurs, weak dollar, strong Canadian dollar, the more likely this trend is to continue to the downside. Okay, let's go back and check the weekly chart. And I can see here that we got down as far as about 127.39. As I go over here to the left, now you see the difference here on this chart. There's still a long way for price action to be able to drop here. And that's the kind of thing I'm looking for. Now, Just because it has a lot of room to move to the downside doesn't mean it's going to do that. But it's a higher probability, again, a greater trading edge if it's kind of unencumbered in here as it potentially can move to the downside. On slow stochastics, we see we're below 20. We are oversold on slow stochastics, which is a good sign in a downtrend. Remember, just because an indicator says something's oversold or overbought doesn't mean it's going to snap back immediately in the opposite direction. And let's see. So it's got room to move. So again, I'd be setting a price alarm on that 1 hour chart at about roughly 127.46. Price alarm goes off. I come back and take a look at the situation. Okay, so we looked at two Canadian pairs. Let's look at another dollar pair. Let's look at let's look at the dollar yen. The dollar is the second weakest. The yen is the second strongest. Let's see what that's showing us here for the dollar yen. Okay, so we've got the dollar moving down. The dollar's been pretty weak for quite some time now, and we've got a situation where downtrend, lower highs, lower lows on the weekly, lower highs, lower lows on the daily. But what we see here that's different from the other pairs that we took a look at is on the 1 hour chart, we can see price touch that lower Donchian channel. And now it's making higher. It took out the upper Donchian channel back on the 12th of this month, and it has continued to move higher. A little bit of retracement here, but it has continued to move higher. So my long-term charts are telling me to sell. The short-term chart is signaling on the 1 hour a buying opportunity. It's not signaling a buying opportunity yet on the 4 hour, and it may not. So this is a pair personally that I would avoid because the charts are in conflict here. The longer term charts are in conflict with the shorter term. Now, if you're a very aggressive trader, somebody might say, well, you know, if you're making higher highs and higher lows on the 1 hour, why don't you buy in that situation? That's something that you can do, but you're going counter to the longer term trends when you're doing that. And if you're, like I say, a more aggressive trader and you want to do that type of thing, that's fine. Personally, I don't. So I would wait till these charts come into alignment. I don't have to trade the dollar yen. There's 28 currency pairs that I monitor out there. So anything that I don't particularly like the look of, a trading setup that I don't warm up to pretty quickly, I'm on to another currency pair. Let's take a look at the pound yen. Again, pound is the weakest currency and the yen is the second strongest. Down, down, and here we've got, because it's a yen cross again, and the dollar yen, we saw what was happening there. We've got a similar situation here where on the 1 hour chart, price has taken out the upper channel, is moving higher. Here, it's also touched the lower channel. Now, this is a little more compelling for an aggressive trader reason to buy if it would take out the upper channel again. But again, we'll see what's going on. This is not a pair that I would be trading at this point, just based again because the longer term charts are in conflict with the shorter term charts. Okay, I hope you found this helpful, and please feel free if this brought up any questions in your mind. What did he mean when he said that, or why did he do it that way? Please feel free to email me, rcrivofx@gmail.com. Thanks again for listening, and look forward to having you around next time. Bye now.